Hello, welcome to another AQA Accounting past paper. Today, Accounting 1, June 2016, and I'm just going to do question 1, which is simply an income statement extract followed by a balance sheet extract. The first half is just the first half of an income statement, and the balance sheet bit is just a bit about current liabilities. And we're presented with a trial balance essentially. A lot of items with their value next to them. We're told the year end and the name of the company, or the person that runs the company. Sounds like it's a sole trader. And then a few additional information items that you just need to work through and will help you calculate what you need to for the income statement and the balance sheet. And there's 2 multiple choice questions as well that are each worth 1 mark, which are found by just solving simply these additional informations. So the first thing to do is just to work out each of these and just find out what they equal and how they affect the figures in here, and then how they will be lifted into the income statement and lifted into the balance sheet. So it's always easy just to calculate it first. So working 1. Inventories at the 30th of April 2016 were valued at £20,540. We know the year ends the 30th of April 2016, so we can just assume that the closing inventory, as you can tell, my handwriting's got no better. So closing inventory 2540, very simple. Working 2. The carriage outwards account included 1400, which related to carriage inwards. So something that was carriage in was counted as carriage out, so we just need to sort of flip that back in a way. So we already have a carriage out figure, so we can just play with that now. So the existing figure was 6550. I'm just going to take off the 1400, which brings us to 5150. So we've got some carriage in with 1400. We don't already have a carriage in account, so we just have to create one. And just make that 1400. So you'll see how there's always an opposite and equal reaction. You've taken 1400 out of one count and put it into another, so you know it's still going to balance if you were to do a balance sheet. Working 3. An annual rates invoice of 2400 for the year ended 31st of July 2016 remains unpaid. So we can already tell this is an expense, and it says unpaid, so we can sort of start to think it's an accrual, but we have to look a bit deeper. So 31st of July 2016, so it's a good idea to work out how many months in accrual are we. So let's work that out first. Let's work it in months, and then we can sort of calculate the amount it's worth after doing that. So I think the best way to think about it is there's 12 months in the year, and I'm going to take away which months haven't accrued yet. So we finish on, let's say it's the 30th of April right now, and the invoice goes up to the 31st of July. How many months are in that gap that hasn't happened yet? Well, you've got May, June, and July. So these 3 months don't need to be paid yet because they're in the future. But prior to that, there are 9 months which need to be paid but haven't been paid. So that's 3/4 of a year, or 9/12 of a year, however you want to simplify it or put it to yourself. So how much is this accrual worth? Well, we know the total year figure is 2400, but we know not all of that is an accrual because some of that relates to the future. But we do know that 9 of them 12 months relate to the past, which we should have paid, or 3/4 of a year. So whichever fraction you want to put is fine, and that just gives you 1800. So that's an accrual, that's a current liability, so that's going to come back to bite us later. But this also increases our rent and rates expense, doesn't it? Accruals increase expenses for the year. So we already given 35,405 there. I just need to add on that 1800. which gives us 37,205. Easy. So working 4, which will hit this expense again. Rent expense totaling 1,530 has been paid in advance for the month of May 2016. So rent totaling 1,530 has been paid in advance. So that sounds pretty clear cut that it is a prepayment. And it tells us exactly what the amount of the prepayment is. 1,530. And now we just simply need to take that away from rent and rates. So if we've got an accrual, we added it to rent and rates, and prepayment is just the opposite. We just take it away. And one mistake that might be made is that we're no longer taking this figure here because we've already hit it here. So 37,205. I'm just going to take away that 1,530, which gives us 35,675. So we can sort of, that's not the figure anymore, but it's that one. Working 5. Motor vehicle expenses included 300, which related to private insurance of Tanya's son's car. Okay, so we've counted some expense that relates to something outside the business in the books of the account. So the motor vehicle expense account has been charged £300 that doesn't relate to the account at all. So I think we should take 300 off it because this does not relate to that account. It relates to something outside the business. So that gets us to 12,200. And for good practice, I don't think this will affect us in terms of answering the questions, but it would increase the drawings. We've taken cash and we've taken it outside of the business, so it's just 15,000, which is the existing drawings figure here, and you add on 300. 15,300. So you can see again how there's an equal and opposite reaction. We won't need the drawings figure, but it's just good practice to show that in a way. And the final working, the motor vehicle expense account, so we're touching that again, has been understated by £35. So again, take the figure from here, not the one in the trial balance anymore, because we don't need it. And it's been understated 35, so we just need to add that on to give us 12,235. So we've taken all the additional information and we've worked with them by taking the trial balance figures and changing them in a way as we're asked. So question A is prepare an extract from an income statement for Tanya Marsh to show the gross profit for the year. So we only need to go to the gross profit. We don't need to go into expenses, net profit, all that sort of stuff. And I've already laid out the skeleton of it just to save time and save you having to watch me write out titles. So never forget the title, it's always worth a mark. So what's always at the top of an income statement? Well, your main income, your revenue, and we haven't touched it. So it's just 120,000. And as you probably know by now if you've watched my videos, returns in is taken away from that. So just take off 2,800 and just give that a nice total of 117,200. On to cost of sales. What's the opening inventory? It's in here, 11,500. Purchases, we didn't touch that either. Returns out, it comes to, I don't think we touched it, 1,200. So how do you take this away from cost of sales? And how I remember it is if you take away returns in, you also take away returns out from cost of sales. So returns is always a negative depending on where it is. So returns in is a negative from revenue, returns out is a negative from cost of sales. And carried in, well, that was just 1,400. We just had to add that figure in. And also another good practice that I always remembered was carriage in is added to cost of sales and carriage out is added to expenses. And by added, I mean it increases expenses. It doesn't reduce the figure. And the closing inventory was simply the figure we wrote in W1, 2540. And we always take away closing inventory. So adding all that up, we get to 35,660. So you just need to take this figure here and just subtract the 35, which brings us to 81,540. And that's that. You've calculated the gross profit. Easy enough. So it's just remembering what's taken and what's added. I know it's a very minuscule figure, but it's always good to remember. Are you adding it? Are you taking it away? Where from? Revenue, cost of sales, etc. So now we've got the income statement done. It's just two simple box ticks, really. Question B, what's the correct figure for rent and rates? Well, we worked it out in W3 and W4, and we're saying 35,675. And what's the correct figure for motor vehicles in part C? Well, we worked out in W5 and W6. It's as simple as that, really. We've already worked them out. And finally, onto the little current liabilities balance sheet extract. So, what are our current liabilities? Well, let's just go down here. We've got a bank overdraft, which are always current liabilities, unless it's massively stated that it's not. So current liabilities, just for the sake of practice, it's less than 12 months. Will we owe money in less than 12 months? Easy. Next, the bank loan, repayable in February 2017. If you add a year to that figure, you get April 2017, which is after that, so we know it's within 12 months. So we can just put bank loan. Next, going down, can't see any current liabilities until we get to the big main one that you get every year nearly, trade payables. People we owe money to, also known as creditors. And finally, something we worked out earlier. Don't forget to check your additional information with these questions. In W3 we calculated an accrual here of 1800. Let's put W3. And we just need to put these figures now and just lift them in, really. It's no more tricky than that. And we're adding them all up as always. Trade payables we didn't touch. And the accrual was worth 1,800. Total that up. 59,275. And that's that, really. One thing I probably should have done was just write which of the workings it was for these questions. For example, this should have said W2, for example, and that should have said W1. Just so it lets the examiner see where you've got your workings from. But most of the marks are gained in doing this workings here. So as I always say, make sure you're doing the workings, and if you somehow do mess up, say, the income statement, say if you get maybe you took away carriage in and added returns out, at least you got the figure right for carriage in. You may have taken away 1,400, but you've proved that you know the figure's 1,400, which may still get you a mark. So just make sure you're always doing the workings, because it just backs up what's going on in your brain. And that's it, really. Any comments or questions, please ask me. Thanks for watching.